Hey everyone, and a huge welcome to this brand new video right here on the Gap Advisors Ind AS Clinic YouTube channel. I am seriously so excited to have you with us today. Look, we are doing something pretty fascinating right now. We're taking a forensic deep dive into a real-world accounting observation. We're talking Ind AS 109 and financial guarantees. It's like a giant puzzle, and we're going to break down exactly where a major listed company completely missed the mark in their reporting. So grab your notes and let's jump right into this explainer.
Real quick, here's our roadmap. We'll set some ground rules, do our real-world review, look at the actual standard, hand down our compliance verdict, and then wrap up with some amazing toolkit and community resources.
All right, Section 1, Ground Rules and Disclaimers. Got to get the house in order before we dig into the numbers, right?
So right out of the gate, I just want to emphasize that the views expressed in this explainer are entirely the personal views of the author. They are absolutely not binding on anyone. Please always seek the help of a qualified expert before you take any professional action or, hold off on any action based on what we discuss here today. Just treat this as a really fun, educational deep dive.
Okay, let's make sure we're all speaking the exact same language here. For this scenario, our functional currency and presentation currency is the Indian rupee, or INR, meaning any foreign currency is just, well, any currency that isn't the Indian rupee. And our reporting period? It begins on the 1st of April and ends on the 31st of March. Super straightforward, but absolutely crucial so we don't cross our wires. Moving right along to Section 2, the real-world financial review. Let's head over to the actual crime scene.
Now, the origin of this case is actually what makes it so interesting. This isn't theoretical. This observation comes straight out of the published Ind AS financial statements of a listed company. Gap Advisors essentially did a suo motu review, meaning they proactively downloaded the financials and took an independent, incredibly close look under the hood. Now, quick pro tip, you can actually get your own financial statements reviewed by Gap Advisors before you even sign them. You just email them a near-to-publishing PDF at info@gapadvisors.com. And hey, if you're an investor, checking a company's financials for Ind AS compliance is a total game changer for making solid decisions on buying, holding, or selling your shares.
Okay, so what did Gap Advisors actually find during this review? Well, the company published a specific accounting policy on how they handle financial guarantees. We're looking closely at how they plan to account for the subsequent measurement of those guarantees. And spoiler alert, it didn't exactly match up with the rulebook. Let's see why.
Which perfectly tees up Section 3, Ind AS 109, the standard itself. Time to look at the actual letter of the law. So, paragraph 4.2.1c of Ind AS 109 is the heavy hitter here. It mandates that an entity has to classify all financial liabilities to be subsequently measured at amortized cost, right? But there are a few exceptions, and one of those exceptions is financial guarantee contracts. The standard explicitly states that after initial recognition, the issuer of that contract must subsequently measure it at the higher of two very specific amounts. It's those three little words, the higher of, that literally trip companies up all the time.
And here is what you are actually comparing. Bucket number 1, the amount of the loss allowance determined in accordance with Section 5.5. Bucket number 2, the amount initially recognized minus any cumulative income you've recognized under Ind AS 115. To stay compliant, you absolutely have to subsequently measure the contract at whichever one of those two numbers is higher. It's not a suggestion, it's a hard rule.
All right, we know the rules, we've seen the company's approach. Section 4, the compliance verdict. How'd they do? Honestly, not great. The verdict is a definitive non-compliance. When you read the company's accounting policy for the subsequent measurement of financial guarantees, they completely ignored the higher of requirement from paragraph 4.2.1c. Actually, wait. Ignored might be the wrong word. They just flat out missed it. Because of that, their policy is definitively not in accordance with Ind AS 109. And missing that higher of test is a huge deal. It means you risk massively underreporting your financial liabilities, which paints a totally inaccurate picture of the company's health for everyone involved.
So how do you make sure you and your audit teams don't fall into the exact same trap? Let's check out Section 5, the Gap Advisors Toolkit. Okay. Get this. The issue repository on gapadvisors.com currently hosts over 4,500 issues, and their detailed responses all about Indian accounting standards and Indian GAAP. Literally, any person can register on the site for completely free and submit their own specific issues. You'll get a comprehensive, detailed response delivered straight to the inbox of the email you registered with. For auditors, this is basically a goldmine. It is an incredible way to solidly document exactly how you addressed any tricky issues relating to the application of Ind AS.
Fun fact, the exact observation we just tore down today was actually featured in the 201st edition of the Gap Advisors Task Weekly newsletter. This newsletter is authored by CA Manish C. Ayer, the director of Gap Advisors, and published on LinkedIn. He's done over 230 editions to date. If you are registered on LinkedIn, you really need to subscribe to it, again, totally for free. And hey, if you're wrestling with your own Ind AS or IFRS nightmares and need customized help, you can book a one-on-one consultation directly with the author through his page on topmate.io.
All right, rounding the corner to our final section, join the community. Let's stay connected. If you are the kind of person who wants an even deeper dive into the technical nuances of the observation we dealt with in this video today, you definitely want to connect to the Gap Advisors Ind AS Clinic podcast. You can stream it right now on Spotify, Amazon, or YouTube. Also, for instant live updates on all new videos, podcasts, newsletters, newly responded issues, and newly issued standards, go follow the Gap Advisors Ind AS Clinic channel on WhatsApp. It's the best way to keep your finger on the pulse.
And that is a wrap on today's case study. Thank you guys so much for your time. Listen, if this video brought you value, please drop a like, add your thoughts or questions in the comments, and be sure to subscribe to the Gap Advisors Ind AS Clinic channel if you haven't already. And please, do me a huge favor and share this video. Send it to your contacts, your colleagues, your audit and finance teams, and especially among students pursuing their CA course. Your shares actively help spread the crucial knowledge of Indian accounting standards. So I'll leave you with this. The next time you sign off on a set of financial statements, ask yourself, are you absolutely certain they would survive the Ind AS 109 higher of test? Don't leave your compliance to chance. See you next time.